Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So far we have again seen another positive gain for the metals in the latest week. I hope many of you managed to capitalize on the breakouts. In fact, into the close on Friday, we are now up over 1,000 points on our metals positions that we executed last week. So those markets have delivered incredibly again for us in the latest week. Of course, if you're up 1,000 points on the position, that would give you per one lot traded over 10,000 US dollars profit in just a matter of 1 week. If of course you're in at 10 lots, that gives you over $100,000 profit in just 1 week. So we saw some explosive moves off the back of the Federal Reserve on Thursday. As we mentioned last week, feel free to go back and watch that report, but basically what you needed to see happen last week was gold to continue to hold above 1,900 US dollars per ounce and silver to hold above $26 per ounce. We saw those levels get tested several times last week, really requiring a lot of stamina. So if you understand the markets, the mechanics that go on day to day, especially the way that the market makers will target certain levels, this really gives you that edge to have the additional stamina to stay in for the positions and then capitalize on the big breakouts. We've seen a 500-point breakout there on Friday for gold. We've been able to maximize by having additional positions added in the latest week, and we've also managed to capitalize on the big breakout that we've seen on palladium on Friday as well. So our open positions are currently up over 1,000 points into this weekend. We've mentioned it before, but 2020, that will go down in history as one of the most profitable years ever for commodities trading, and this could just be the beginning. So as we head into the final quarter of the year, we're heading into a highly lucrative event-driven period where we're going to get back-to-back trading opportunities such as non-farm payroll that we have next week. We then have the following week the European Central Bank announcement, the September and October FOMC meetings, and of course the US presidential election, which is going to be a huge event that will drive market sentiment over the next 90 days from now. In fact, Goldman Sachs have already begun preparing clients for what they predict could be one of the most profitable quarters ever in history. So if you've been kicking yourself, missing out on some of the big trading opportunities so far this year, you still want to make 2020 your best year yet. We've still got another 4 months left of this year, and you don't want to be kicking yourself that you have missed out on potentially some huge moves here over the next 4 months. The presidential elections, they are some of the most profitable trading events. They only come around, of course, every 4 years. In 2016, when Donald Trump won the presidency, gold skyrocketed almost 10% to post its biggest one-day move ever in history. So looking ahead to September and October, that will set the stage for the build-up to the November election, where the market theme will be driven by a very strategic political narrative and rhetoric by Donald Trump. So around those themes, they'll be focused on the vaccine, US and China trade tensions, and the economic recovery from the greatest pandemic in history. So last week, Donald Trump, he pressed the FDA to move faster to address the pandemic, and we saw the impact that that had on the precious metals. He also put out the narrative that if Joe Biden wins, the US stock market will collapse and there will be violence on the street. So market volatility is definitely expected to increase over the next 90 days from now. And we've said it before, but these extraordinary times that we see right now in the markets, they do provide you with extraordinary opportunities to profit very fast. So the sort of moves that would typically take several months to develop, right now we're seeing them in the matter of days. And in these fast market conditions, data is of course power. After every parabolic move to the upside, there will be pullbacks as hedge funds, institutional traders, they take their profits off the table, and this is where you can't get too complacent. So when you're making money very quickly in these market conditions, you have to be nimble to bank those profits, know the levels to come out of the trades, lock in profits, protect positions, otherwise you will get crushed with the volatility. You need to be nimble, adaptable, utilize a research-driven approach to ensure that you're getting the ultimate edge to capitalize on each big move with accuracy and precision. That's where technical analysis and outdated technical indicators will just not work in these market conditions. If that's all you're relying on to have your edge in these markets, you'll just end up FOMOing in, you're going to miss out on opportunities, and you'll get chopped up. So in these markets, data is power. The greater the data and intelligence you have access to, the greater that your edge will be. So you need to know how the hedge funds, the banks, they're positioning themselves in the markets, where they're buying, where they're selling, so that you can get your timing precise, Be aware of the key liquidity zones, the fundamentals, macroeconomics, seasonal cycles, the intermarket correlations, which will help you to get an edge. And as we head into the final quarter of the year, we're heading into a highly lucrative event-driven period, which is perfect for trading. So if you want to successfully navigate the volatility and capitalize on the huge opportunities ahead to build substantial life-changing wealth, then you want to utilize a research-driven approach to the markets. So with that, let's just move over to the charts and we'll talk you exactly through what we're looking at as we go into a new week here. So first of all, if we start off with gold, which closed at 1,964 US dollars per ounce. We mentioned it last week. You just wanted to make sure that on a closing basis, gold continued to hold above the 1900. You want to look out for buy evidence at that zone, and you can then capitalize on the breakouts that you often get at the end of August. We'd studied this in detail, where typically after the Jackson Hole Symposium and also the cycles for the end of August are very strong for the metals. And we've seen this typical fake out as well during the course of the week here, where we had several times where gold looked like to many retail traders that it was about to break down. And this is where you've got that fake out in the market. It causes a lot of traders to get nervous, to dump their positions, especially as you see the market makers running the price up and down all week here. So this will really tend to tire traders out during this up and down constant price action. A lot of traders, they then end up getting stopped out. They get chopped up a lot. They move to the sidelines only to then see gold move in the original direction that they anticipated, which of course was the 500-point breakout to the upside that we saw on Friday. So effectively, every one lot contract that you have on that position, you're making $5,000. If you're in at 10 lots, you're making $50,000 and so forth. It's quite a large move to the upside that we saw on Friday, 1.9% move to the upside that we've seen there on gold, which is quite significant. And with that, as we go into a new week, you will note that we're sitting right at the upper end of the pennant at the moment as well. And we continue to get higher lows in the chart. So what I want to observe going into next week, especially as Monday is a bank holiday in the UK, is whether we can get some additional follow through to the upside here, get a break above the last week's highs here and start making a move back towards the recent swing highs. So that's really what I would look out for. We do have our positions on now, so we've got our trades established on this market. We're up over 1,000 points on our metal positions going into a new week here. We'll look to be nimble to capitalize on the price action going into next week. I would look out for the potential for profit taking later on the week around non-farm payroll, which will be on Friday. The following week after that, you have the European Central Bank announcement. The week after that, you have the FOMC statement. But it's been a fairly solid move here into the close on Friday. So what I want to look out for further confirmation that gold is going to go up here is to get a breakout back above Thursday and Friday's highs here. If we can do that, then we can start to make a move back towards the recent levels that were tested in the middle of August there. So if we can get some additional follow through, those will be the next levels that we're targeting to take some profit off the table there for gold. Then moving over to silver. So the gold silver ratio has continued to consolidate and break down over the last few days. Silver had a stronger move last week than gold. So silver was up 2% on Friday, up 3.4% on the week. You can see here the price action last week with the market makers. They've run the price up and down around the 26 US dollar per ounce handle here. You've seen with absolute precision where the price has held at that zone on a number of tests, but it really freaks out anybody who's been long that market. They start to panic as the price breaks down. They look at silver to potentially have quite a significant sell-off. This is what many retail technical traders were looking at last week for the potential for silver to break down significantly. And then with that, we've seen the complete opposite. Of course, later on in the week, we saw silver get a bid, remained above 26 as we mentioned last week. All silver needs to do is continue to hold above $26 per ounce on a closing basis. If it does that, then you want to look at buying evidence at that zone in order to capitalize on that. So well done to everybody who was able to do so. Feel free to go back and watch last week's report where we discussed that in detail. That's exactly what you needed to see happen in order for silver prices to continue to get bid. So you can see here they've closed at $27.46 per ounce. So really what I'd like to see going into next week is whether silver can then stage a further follow through, break above 28, then break above here the swing high from the middle of August. If we can do that, then we can really start making a move back towards the upper end of the recent channel here as well, and effectively retest the highs that were put in at the end of July here. If we can get some additional follow through, we've now broken out of the pennant. We have a continuation pattern. We may get some consolidation next week, but if silver can break above these levels, so effectively break above last week's highs, break above the mid-August highs, then we should start to make a move back towards the highs that were tested at the end of July. And that's what I would look out for really now as we go into next week, given the price action that we've seen over the last few days. And then palladium, which we mentioned to you in detail last week as well. This has been a great market for us to build held additional positions on the consolidation in the latest week. We had a nice breakout to the upside on Friday, 1.8% move there over a 450-point breakout on Friday. So far in the month of August, it's up 2.6%. But again, as we've mentioned before, Palladium is very worthwhile keeping a close eye on with the correlation that it has with Tesla, with Palladium being utilized for Tesla vehicles, for the batteries in those vehicles. And therefore, when you see Tesla prices have these big breakouts to the upside, you tend to see that correlation as well with Palladium as well. You go back to last year and Palladium prices essentially from this time, so from August of 2019 up until March, they doubled in price. So you want to look out for that. So over the next 6 months, Palladium could do incredibly well here. And typically the lows get formed over August and you don't retest those lows again once you get into September. So I would absolutely keep this on the radar going into next week, especially if we can climb and close back above $2,200 per ounce for Palladium. This is where we could really start to make a significant move to the upside. It's been basing now for the last month, still developing higher lows here. So all you really need to see on Palladium going into next week is a clean break back above the weekly highs here, close above those levels, and then we can start to make a move back towards the 2,300 level and then back towards the highs that were tested in the middle of July here. So I would absolutely have Palladium on the radar for this month. It's a very lucrative market. And as I mentioned at the start of today's session, you really want to make sure that you're utilizing a research-driven approach in these market conditions. Technical analysis by itself is not enough at all. You can't get by just by using technical analysis in these markets. If you're missing out on opportunities, if you're just getting chopped up in the current markets, or you're FOMOing into a lot of positions, then you absolutely need to be utilizing more data, more intelligence. You need to get a better edge. If you're not making money in the precious metals at the moment, you absolutely should be. So if you would like to become a member of the Gold and Silver Club and join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also get access to our real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.